So it is my great pleasure to be the moderator of this panel on remittances and financial inclusion, opportunities hidden in plain sight. I like the provocative nature of the title. And as an introduction, I would like to say that the nexus, the articulation between remittances and financial inclusion, has been alluded several times today, and it's an obvious one. If I look at the objectives of the financing facility for remittances, I mean, one of the, beyond lowering cost and increasing access in rural areas, one of the objectives was also to articulate remittance services on a stronger basis with access to other financial services. And remittances has been a strong driver of financial inclusion when we look at experience. It's often the first experience of recipients with a form of financial service when they receive a remittance. And when we look at the dramatic acceleration of financial access through mobile money innovation, especially in East Africa, the key drivers of that acceleration has been domestic remittances, people-to-people payments. And what's interesting is to see how from that basis, which was related to a payment function, then a number of additional products then have emerged, linking to savings account, linking to microinsurance products, some credit even now. So remittances has been, using this technology revolution, has been a very strong driver of financial inclusion already. I think it's also interesting when we look at the paper which was prepared for the G20 Australian presidency, paper prepared by the World Bank in partnership with the Bill and Melinda Gates Foundation and the Better Than Cash Alliance. And I would just say that the Better Than Cash Alliance is a global alliance which is hosted by UNCDF, by our organization. It basically talks about these issues, the opportunities of digitizing payments, how digitization of payment, transfer, and remittances contributes to the G20 goals of broad-based economic growth, financial inclusion, and women economic empowerment. It's a really good read. So I think these are just some examples to show how these two notions have been closely connected already. And a growing number of financial inclusion strategies recognize the key role of remittances in driving financial inclusion. So I think it's really a very topical issue to discuss. And I think we have a great panel today to discuss about that issue. If I look at the range of perspective brought to really unpack that agenda, from international financial institutions as well as regulators. So I would like to, without further ado, introduce formally our panelists. So starting with Fernando Jimenez-Ontiveros. Welcome, Fernando. So you are the acting general manager and deputy manager for operation of the Multilateral Investment Fund at the Inter-American Development Bank. And you have been closely monitoring the execution of the MIF portfolio and evaluation on a range of financial inclusion-related issues. We have also the pleasure to have with us Sibel, Beadle, senior banker, financial institutions at the European Bank for Reconstruction and Development. And Sibel, you have been also operational leader for many projects in the areas of financial inclusion and remittances. Then we have with us Paola Giucca, principal manager, market and payment system oversight directorate at the Bank of Italy. And you have a range of experience around policy issues when it relates to retail payment, remittances, and financial inclusion. So, and finally, somebody I don't need to introduce to you, Pedro de Vasconcelos, who is manager of the financing facility for remittances, and at IFAD, and have been driving a lot of really innovative agendas around remittances for development. So I think, again, it's a great panelist to discuss that issues, and I was thinking of structuring the discussion around key core issues. I mean, first, question about linking which exists between remittances and the broader objective of financial inclusion. Then I would like to dive a bit more specifically on the role of policies in shaping the opportunities of synergies between remittances and financial inclusion. And then, talk more specifically about the role of the private sector and some of the innovation we have seen in implementing those opportunities. After that, I would like to really open up, the floor for question and answer and a lively discussion among us, and basically close that session with, final takeaways, recommendation, major ideas from our panelists on what kind of things we should really be focusing on as an industry, as operators, as policymakers, to really make those synergies between remittances and financial inclusion happen at the scale that we want it to happen. So without further ado, then I would like to start the discussion basically with the first question. To what extent do remittances have a role to play in reaching the broader objective around financial inclusions? And maybe, if Paola, you can share your perspective on that broader issue with us. Thank you.
Yes, thank you, Henri. Good evening to everybody. In the experience we so far gained, we saw a huge potential for remittances services to reaching broader financial inclusion objectives. And I would like to share with you some basic thought on that issues. The first general thought concerned the fact that remittances services are largely nowadays initiated and paid out by cash. And generally migrants and their families are among those that are less likely to be financially included. So this very general picture led me to share the first thinking. There is really a big gap between the nowadays way how the remittances are carried out and the usage of cashless payment instruments. And there is a big high potential for remittances to foster financial inclusion. And this happens mainly among very complex financial process. I would say also that this gap also explains why I am here today as a representative of a central bank, which is from, well, in recent years, put big efforts in this field, exactly because the basic thought underlying the remittances and the financial inclusion issues share a lot of problems, but also potential as regards to other payment instruments issues. The second aspect concerns my participation today. They already mentioned in the previous panel the task force, the BIS and World Bank task force on the payment aspect of financial inclusion, in which remittances play a big role. So that's the first general issues. To explain why now remittances may play a role in financial inclusion, we cannot forget that remittances, as you already said, is mainly a payment services, and so it shares with other payment services the need to find out some more efficient way to be paid. So that's the first aspect. The second aspect is that is related to the saving component that associated to the remittances. And both of these aspects, the payment aspects and the saving components of remittances, bring to a big demand of access to a transaction or deposit account, on which that at the end it represents the first step toward remittances bring to a greater financial process of financial inclusions. This is also because, well, the first demand is a payment demand and saving demand, but there is a greater also challenges to become a much more financial inclusion aspect relating to the investment and credit demand from migrants in using the saving component of remittances. This from the demand side. From the supply side, the access to the deposit account improved dramatically the liquidity of the banking system, especially for the receiving countries, but also increase a lot the information that banking system may gather from receiving the remittances flows, thus allowing also some new form of credit, I would say, consideration toward the migrants, in thus doing an increasing better condition in terms of credit and investment access from migrants. So my second general thought is concerning the fact that access to deposit account is mainly a cornerstone for more efficient use of cashless payment instruments, but also access to saving and more general investment and credit services. My third consideration is more linked to the economic and social factor associated with the migrants' behavior. Generally speaking, migrants shows a greater vulnerability as compared to other people, which at the end increase the cost for the society if migrants are not included. So in this sense, access to financial services represent an essential part of the overall migrants' integration process. And in this context, the remittances represent the first step in that financial inclusion progress. And this consideration also explained why, and recently, there is an increasing associating concept which links the access to deposit account to the basic right to be fully citizen within a given society, which brought us to a more general needs of financial inclusion, in which remittances is really the first aspect allowing for that, and in which migrants is becoming more and more a citizen and overall citizen in our society. I should stop here because I know that time is very strict one. And
thank you very much. I like the concept of financial citizenship.
Yeah.
You know, that remittances can bring about. So I think that's a very powerful notion. And how you mentioned that it creates the kind of history of payment patterns, creates not a credit history, but kind of a reference which can also help providers to extend access to other financial services. The link to savings is key, as you said, and the impact on the financial sector as well in terms of liquidity, etc. I think. Thank you very much, Pedro. Now I would like to turn to you, and if you can share your perspective on this broader nexus between remittances and financial inclusion.
Thank you, Henri. It's of course a very broad question, but I believe to answer that, we need to go back to 15 years ago when remittances were discovered. And when I say discover, I mean by the development organization or by governments that suddenly saw that this was big money. This had already been happening for a while. Migrants didn't wait for remittances to be discovered to start doing these transactions. But it was discovered there was a lot of money, that there was a lot of potential, a lot was going to developing countries. And one particular aspect that came out of that is, a lot of these people are unbanked, a lot of the people that are sending, a lot of people that are receiving. So wouldn't it be wonderful to make that linkage between remittances and banking the unbanked? And I think this is what generated that interest that was also translated to the G8 and then G4 and governments and so on. But if you just look at about the figures, there are 2 billion people right now unbanked. And if we're talking about adults receiving remittances, of the 750 million, we can say that approximately 400 million of those, very conservative, would be adults receiving remittances. Every survey that is done in this field showcases the majority of remittances recipients are unbanked. So I don't know how many more data on that we need to put to just make it obvious that remittances is about people that have financial resources outside the formal financial system. And I think by just saying those two things, we're starting to define what financial inclusion is about. So we have a supply and a demand that keep missing each other. Or when they do, they stay, if I may, at their first date. It doesn't go beyond, because we've been discussing this now for a while. So what is the difference? And I think at a global level, we still haven't reached yet the stage where we have understood all the synergies that are necessary in financial inclusion linked to remittances to have an impact at scale. And I think this is basically what we are seeing. So it is not a question of is there a linkage or a nexus between remittances and financial inclusions. We know it is there. There's models and pilots all over the place to prove it, that it does work, that unbanked people that receive remittances, if the right conditions are put in place, get financially included. And when we say that, it's not just with a status saying, I have a savings account. It's, I have a savings account, I use a savings account, I use financial services linked to those, I am financially included in the real term of the word. So how do we go beyond that? And I think this is the difference now with the discussions that happened 15 years ago or 2 years ago in the same forum that we held.
So that's really vindicate the title of the session, Opportunities Hidden in Plain Sight. I mean, the opportunities have been there. I think the discovery of remittances very quickly linked to the opportunities to basically create the synergies with the broader financial inclusion, but that hasn't happened at scale yet. Exactly. And I think, what we want to discuss in this panel is trying to unpack that a little bit and understand why isn't it happening? I mean, if the value proposition is obvious, and if the kind of interest and focus of so many development partners is also there. So I think, that brings us maybe to our second question, where we want to unpack a little bit the role of policies around, this nexus between remittances and financial inclusion. So in a way, on that question, I would like to ask, how can financial sector policies maximize the benefit and impact of remittances? And vice versa, are there any specific remittance-related policy measures that can enhance financial inclusion? So I think it goes both ways. And on this kind of policy dimension of this nexus, then, Fernando, I would like to pass you the floor, and if you can share some perspective on that issue.
Thank you very much. Let me start by thanking really my good friend, Pedro Vasconcelos and IFAD. This is a great conference, not only the quality of the panelists, I shouldn't be saying that because I'm a panelist, but more importantly, it is a very informed audience. There are a lot of practitioners, people who really deal on a daily basis from different aspects. So perhaps it might sound a little pretentious to go back to basics. What I like actually very much this notion that we are connecting remittances with financial inclusion, because at the end of the day, why is financial inclusion important? Because financial exclusion tends to be associated with other types of exclusion. I mean, people who are excluded from the financial sector tend to be excluded from the workplace, from information, from a lot of things. And the paradigm of exclusion is actually migration. I mean, when you are so excluded from your economy, from your society, that you actually have to look for how to better the situation of your family. So in a way, I think there's a kind of a poetic justice that the very same people who had to live because they were excluded, they learned, they as diaspora, they are now familiar with the advantages in their host countries, and they can be a very powerful and dynamic force really to restore financial inclusion. No? So because again, at the end of the day, I liked it very much with when Adolfo Brizzi said it's their money, because when we started working at the MIF 15 years ago, and I want to pay tribute to my former boss, Henri, who was instrumental in putting remittances off the map. I am a civil servant, half of my life civil servant at the Ministry of Economy and now at the Multilateral. We at the multilateral organizations are very creative when it comes to what to do with other people's money. But at the end of the day, it's their money. And so I think really more and more we have all been evolving into how do we empower the migrants and their families so that they can make more informed decisions about the future, their future. And how do we overcome the death of distance, the challenges of distance. And that's where, and I'm doing this introduction and I'm ending here, because it has a lot to do with what you can do at the regulatory level. Because distance is not only the longest distance, it's not the distance between 2 points, it's any circumstance that prevents you from understanding what is different. So I think the two challenges of financial inclusion are, A, the power of technology to really reach out to all people. In a way, the promise of technology to lower the cost, to scale up, to really reach everybody. So that's the death of distance in that sense. But also then it's connected with the death of mistrust. I mean, something that is associated with distance is that you don't have information. And actually, there are a lot of cultural things that prevent the banking system to connect with people and people with the banking system. So yes, absolutely. I believe that our experience is that, of course, for the development of business strategies, you have to really accompany this by enabling legal and regulatory framework. What are the most promising regulatory policies that can deal with these obstacles? I would say you have to find the right balance, and that has been mentioned, between having a stable financial system and at the same time really develop the kind of regulation that will serve the low-income population. So requisites or requirements for low-income population to access financial services, to open an account, simplified account, if possible, minimum balance requirements, limitations to transnational financial transactions, restrictions for remittances to be deposited on bank accounts or electronic wallets, barriers to the development of low-cost distribution channels, agent networks and mobile technology. All this is really, I think, at the core of what needs to be done in order to promote financial inclusion.
Thank you very much. I think you mentioned really powerful issues. I mean, the broader notion of exclusion, but also, the role of technology. And, one of the challenges that needs to be really there is the kind of a mobile revolution has really completely changed domestic transfers and domestic remittance application. When it comes to international one, it seems that there is still some challenge related to it. So I think one of the broad policy question is, how do you leverage the potential of technology and mobile wallets and all the digital finance revolution we have seen, and still, look at the kind of compliance issues, regulatory issues when you talk about cross-border remittances. And I think we mentioned very briefly before the kind of de-risking also agenda, which also putting a brake on some of those cross-border remittances, some of which we're starting to use this technology-driven platform. So maybe it's an issue that we'll come back and discuss more about, because it seems to be where there may be tremendous opportunities, but which needs to be structured in compliance with other rules as well, and that's a challenge for everyone. I think, on this second question related to policy, I would like to give you the floor as well, Paola, on if you can share a couple of words on that. And before I pass the floor to you, Sibel.
Yes, thank you. Well, a lot of, I would say, elements, as has already been said, from a central bank perspective, and especially in Europe, we had a huge amount of experience within the last year's process in retail systems in Europe, in which from one side there was a big effort in innovate, standardize, and so on, to become to let the retail payments more efficient in Europe. And in the same time, we supported the regulatory directive for the payment system, in which exactly the elements already mentioned in terms of innovation and competitions in provision of payment and financial services has been coped with, while also we devoted a lot of effort in trying to ensure in the same time inadequate consumer protection, because the two-level innovation, competition, and consumer protection, the three aspects has to go together in order to ensure on the continuing basis inadequate confidence in accessing to the payment services. That was a general overview, and I think that the European experience could be a good experience worldwide, in the sense that to be quite open, innovative, but also trying to cope with the security in using payment instruments. Another big area in which the the development has been quite brought a good experience, it was in improving transparency and financial literacy in order to accelerate the financial process. Again, transparency is a sort of regulatory aspects, but also is provided by the, well, I would say central banks, but also financial intermediaries, where the transparency is more and more associated with an adequate transparency, not only a regulatory ones, which allows people to understand the conditions, terms and conditions in using the different payment instruments, but also the personal obligation in using that. So it's a positive driver toward the use of more efficient payment instruments. In this case, is also applied to the remittances. New technology open big challenges for remittances too, as in general retail payments. Mobile is one impressive pillars for the foster the innovation also for remittances. There are new developments also in the so-called faster payment, instant payments, and so on, which use mobile as channel to access payment transfers funds, and there is an increasing demand, but also supply, trying to meet together demand and supply also in the remittances. I already listened in the previous panel someone referring to Bitcoin associated to remittances, which is a huge, again, challenges, especially because of the cryptography, the underlying cryptography more than Bitcoin as such. So also there we see a lot of new method to offer new payment services also associated to the remittances one. And at the end, pricing. Prices is also is very important aspects. In Italy, we have a good example in using a website in comparing prices and remittances, and we saw a good results in trying to foster the declining of prices in remittances too. The website is called Manda Soldi a Casa, which was born associated with the L'Aquila G8 5x5 reduction efforts. So I think it's...
No, thank you, Paola. I think you mentioned some areas of policy which clearly bring the two agenda of remittances and financial inclusion closely connected. I mean, we have seen and we have heard example this morning on how increased transparency have increased competition. And when you have increased competition, then the fees are lower and then the values of the remittance is higher for the recipients. Sure. If that is connected to a saving account, suddenly you really link, growing remittances to the ability to build assets on the receiving side. And the same around consumer protection. I mean, financial literacy is definitely, again, an area where not only you increase the savviness of the senders, but also the ability of the recipients to better manage, the financial lives and the opportunities given by the remittance proceeds. So I think these are examples of policy where this connection between remittances, financial inclusion can clearly be articulated. On the policy side, I wanted to turn to you, Sibel, if you can share also some perspective and ideas, from your role at the...
Thank you very much. I work for the European Bank for Reconstruction and Development, the EBRD, and we are a development bank that supports the private sector. And I want to bring the perspective of the private sector to this question. In the region which we operate in, which is Eastern Europe and also ex-Soviet countries such as Tajikistan, Armenia, Kyrgyz Republic, and a couple of North African countries such as Egypt, Morocco, Jordan, we find the problem more that regulation usually tends to limit the financial inclusion of remittance receivers. And we often find ourselves in a position where we have to worry about removing a regulation rather than worrying about what regulation to implement to support financial inclusion. And what we find often is in our countries where dollarization is an issue or where inflation can be an issue, these regulators often try to introduce ways of taxation or limitation on transfers or limitations on convertibility, basically trying to address other problems. But what often happens is if there is regulation that limits the freedom of a remittance receiver, they often do not open a bank account. And if they're going to transfer money, they often transfer money via an informal channel. And that was what I thought I want to share with you.
No, that's really interesting. And I mean, are there specific examples that come to mind where you have been successful in convincing countries to revisit policies which were limiting that freedom or flexibility on the receiving side?
We do have these discussions. It's usually very difficult to have these discussions because often when somebody introduces a policy like this one, there is a reason for it. Yeah. And it's usually quite a long process where you have to work with the authorities to change their mind on it.
Yeah. Great, thank you. So I'm sure we will unpack that further, this policy kind of agenda in the question and answer with everyone. But I wanted to move now to the other dimension. We talk about policy, but I think we all recognize that remittances is really basically driven mostly by the private sector. I mean, you have some state-owned actors or state-controlled actors, Postbank, et cetera, who have a role to play, but I think a lot of the innovation and new model have come from the private sector. And I wanted to turn to you, Pedro, to start on the next questions. From your point of view, I mean, what role can development agencies and government play to support the private sector in promoting remittances and its links to financial inclusion? And in that context, if you could share with us some of the innovations that you have seen and you have kind of supported through the financing facility as well.
Well, as you know, the work at the International Fund for Agricultural Development, but in collaboration with other partners like the IDB, UNCDF, the World Bank, CGAF, and other governments, was to test, to see how development organizations can actually support the environment on remittances and migrants. And in the case of remittances and payment systems, we started to try to see how we could combine this with the private sector. How can we saw very early on that private sector was the source of innovation. For some aspects, NGOs were fine, but if you really dramatically wanted to have an impact in the use of new technologies, we had to look at the private sector on how to do that and how to create incentives for the private sector to target the stakeholders or the target groups that we were looking at. In this case, people in rural areas. So it started by first information, showcasing that there's a market. We started the presentation today saying that of this big $436 billion, 40% goes to rural areas. Everybody knows the first figure, less than half know the second figure, that half of that goes to rural areas. That means for the private sector, put in the terms that Peter Sunderland said this morning here when we're talking about the industry, you need to think also about profitability of your incentives, that there is a market, the $200 billion market in rural areas, where the majority of people will think that there's no market, no profit to be made. So that's the incentive that we try to bring to the private sector. Once this information, is passed, is, well, what are the models of intervention? Can we help model in some ways or incentivize the private sector? And this is what the projects that we've done at a very small scale with little money. It doesn't take much to showcase that something can work. And let me illustrate with one that we did in Sri Lanka. Because an international organization, we're not used to work directly with the private sector. The question, very simple, is which one would you help? This is private money, public money. So through call for proposals and competition, basically, we selected some private sector entities and we went into the field and tested. And we wanted to test in Sri Lanka if we could link remittances to financial services. If tapping the rural remittance market in Sri Lanka was a value proposition for commercial banks. And that's what the pilot testing. For 2 years, we said ourselves, let's try. After 6 months, they came back to us and said, we're very pleased with what you've seen. We were supposed to just extend to 7 branches. They were already thinking about 47 for the next months. By the end of the project, we were talking about 250. Basically, the private sector didn't need us anymore. They had a proof of concept. They see that it worked. They were expanding their client base. They saw that these people receive remittances, could save, could use those savings, could leverage basically the financial resources that they were receiving. And that was, at the end of the day, what the commercial institution was interested in. Beyond remittances is the services or the products that can be linked with it. So this is, I think, one of key roles that international organizations or development organizations can have is in helping doing the first step, and then let the others, in the case that make a difference, bring things to scale. So I think my reference to scale, I think, is for the private. We see it in many of these aspects for the private sector to really push under an enabling environment that can be set through governments, regulations, as we just heard. Regulations are imperative. You cannot do that if suddenly there's an exclusivity agreement that doesn't allow these commercial banks to receive remittances, therefore not able to link it, and therefore failing at their financial inclusion goal that we're trying to transmit. So
that's where innovation and private sector drive need to be matched by the right policy environments. And but no, thank you very much. I think we will hear more example as well from the audience and through the question. But Fernando, I wanted to turn to you as well, and if you can share some perspective on that issues.
Yeah, thank you very much. Actually, piggybacking on what just Pedro said, I think the role of multilaterals, and in particular, at least in our office, our fund, we test pilot proof of concept intervention models. We learn with the private sector players. Then, so that's the first line of action. The second is market information. I think this is a public good that by itself has very positive externalities, and we're working a lot with SEMLA, for instance, to produce a much more detailed and granular information about remittances in the region. And the third, and I want to insist because a lot of panelists have already gone a long way into explaining to have robust payment systems, but I like very much your comment, a proportionate regulation. So I think that the beauty is that by testing pilot interventions with projects, then you can have lessons learned in terms of whether there is the right of the optimum level of regulation and how does that prevent scaling up in a way. We particularly, through this, we have done this through several initiatives. We have one, always calls for proposals, technology for financial inclusion. We have another one on remittances and savings. And I don't know if now or perhaps later I can cite a couple of examples of things that work or things that could be improved in terms of these examples.
Thank you very much, Fernando. It's a big question. So, Sibel, I also wanted to hear your perspective on this kind of private sector engagement, and I know the bank has been also actively engaged with partnership with the private sector, obviously. So if you can share.
Sure. I want to be inspired by the title, which is The Opportunities Hidden in Plain Sight, and give you an example of a project that we have done. About 10 years ago, when remittances was a new phenomenon in a certain region where we operate, in countries such as Tajikistan, Kyrgyzstan, Armenia, Georgia, where migration was started to Russia and they started receiving remittances to this region. We were confronted with the question on what can be done in these countries to help remittance receivers. And I mean, one way of innovating is, of course, learning from the experience of all the other countries. Latin America has a long remittance corridor for 20, 30 years, and we were looking at possible projects that we could implement in this region, which would be an adaptation of an innovation rather than a plain innovation in the region. And one of the very nice things was when we started studying the remittances in this new region, we discovered something that we weren't familiar with from other regions. In these countries, Tajikistan, Armenia, Moldova, Georgia, remittances were happening, but to our greatest surprise, it was happening to bank accounts. And in other countries, such as Serbia, Albania, where we usually deal with, our problem is often that the transfer happens via buses and so on and so forth. But we weren't at that point in time confronted with a country where transfers were happening to a bank account. And when we understood this problem, we got back home and brainstormed about what could be done about this. And we discovered that only about 10% of the people who went into the bank and picked up their remittances had a bank account. So a very simple thing to do was to develop a financial education program where we captured these remittance receivers that came into the bank, right at the bank, and educated them about finances, what they can do, spend a bit more time with women, helping them. And a lot of these people didn't really understand financing, didn't really know what budgeting is. And once you educated them, about 10 to 30% of all the educated people opened bank accounts. We ran a program of about 5-6 years long, and in every country, we educated about 20,000 people. And from those 20,000 people, at least 5%, in some countries up to 40%, opened a bank account. And the average amount they deposited in the bank account in these countries, such as Armenia, was about $2,000 US, which is what is the under the mattress saving in a country, usually what is the estimate for it. So I think my contribution would be that we don't necessarily always just have to look at the greatest innovations and mobile banking. We can maybe also worry about understanding the specifics of a country and adjusting.
No, thank you very much. I mean, that's obviously an opportunity hidden in plain sight when you have, remittance through banks and people just cash out and don't realize the opportunity to open a bank account. So that's such a low-hanging fruit. And as you were mentioning, then looking at the right financial education and engagement with those receivers to basically make them aware of other opportunities, I think it's a fantastic way to really link remittances to financial inclusion. I think, we had really interesting, examples and kind of underlying dynamics to basically, bring about this innovation by the private sector. And I would say our experience at UNCDF, where we also have worked a lot, especially in the Pacific, around financial inclusion and remittances, is, the value of first developing public goods, better information on remittance flows, on market potential, but as well also on experience on the receiver's end, so that people start to understand the kind of financial lives and use of financial services or lack of at the receiving end. And that public good is very powerful to get private sector to realize there is market opportunities. And then to engage with the private sector actors themselves, whether they are mobile money operators or banks or others, and usually find a way to have a level playing field so you can have kind of a competitive process to kind of winnow the best potential ideas, but then invest time to co-develop with those partners those ideas, because very often it is opening new frontiers, basically helping partners who haven't looked at those market opportunities to really get the right idea and approach. And that has been, I think, a very powerful experience that we see. You want to add something?
Very briefly. What seems to be working more, and it might change because, of course, this is a moving process, but what seems to be working more, at least in our experience, in terms of innovation, is combining information technology and mobile banking with banking agents. Typically, you have the best of both worlds. You have, and actually, for instance, we're investing in Esusa, a company in Mexico that precisely deals with exactly the problem that Pedro was mentioning. 42% of all Mexican municipalities don't even have a branch. So basically what they're going to do is to use a lot retail mom and pop stores, retail stores, hardware stores, so that remittances clients don't have to go to capitals or to banking agents, and to accompany that of all the whole array of operations and transactions that you can do with mobile banking. But it's still, at the end of the day, it's still connected with a bank account or with somehow. I'm a little concerned that we might, because microcredit was viciously criticized because I think we oversold microcredit as the panacea for poverty reduction and for all the possible. And I think mobile banking, in a way, we have to be cautious in that sense, that it is certainly fundamental to get to scale, to reduce the cost, but it has to be combined with the human capital and really the connection to these networks of agents. At least that's what we're seeing in the market.
No, thank you for mentioning that example. And I think, the pace of innovation, the things we see emerging is staggering. I mean, we also are developing, as UNCDF, mobile money programs in West Africa, in Benin, Senegal, in Zambia more recently. And you see now the emergence of, what we can call the business model of agent-to-agent transactions. So not MTOs, not banking sector, but, agent-to-agent network, which are developing a very large network, which basically manage them to go to scale. But then, the question is, how do you help to link that to a broader financial inclusion? And I think, and looking at the ways to do that, within the existing regulation, or look at the right policy to drive that. I think, we should stop now and take questions from the floor. So I see some on the screen. So I would like to do that before going back to our panelists and kind of final takeaways and ideas, recommendations. So let me see whether I can read that. What are the next steps to take on remittances and financial inclusion? Where we will be in 5 years from now? So that's a big picture questions. Let me read the 4 of them. How can we measure financial inclusion of remittance receivers? How can anti-terrorist money laundering laws be reconciled with making banking easier for rural and low-income populations? And what about integrating cost comparison website with other existing options, savings, investment product, and others? All very interesting questions. So I think I would really be very democratic and open to our panelists, those that they would like to take on.
Well, probably
so Paola, go ahead.
Yeah, okay. As the first one brings to me to the experience we are sharing within what I already mentioned, the task force for financial inclusion, payment aspects of financial inclusion. I hoped that the answer to the first question you will be find somehow in the report we hope to be published for consultation during this summer. In which many of the issues already mentioned in this panel are, in a sense, bring that, both from the legal and regulatory appropriate one, which is our frustration as to be, as overseer of payment system, we always cope with these kind of problems vis-a-vis the other supervisor or anti-money laundering issues, and we are just in the middle of this difficult task to bring all together, all the issues together. I say there is a big area in which they already mentioned issues of access to transaction and deposit account is there. There is 2 million of people still have no banking account, so it's one issue is very important, which cope with that. So I think that in 5 years from now, all those issues will be coped with the different stakeholders there, and at the end, definitely private and public sector has to play a role together to cope with all these developments on that.
Thank you.
On this, I want to be a little provocative on. It's interesting because some years ago we were all talking about banking the unbanked. Now there's this more broader concept of financial inclusion, and sometimes in a region like Latin America and the Caribbean, I'm sorry to say it, but I've been 15 years working on this, and still 60% of the people don't have a bank account. So I think, frankly, that either the banks really change the chip and really downscale what they do, and they discover this market, or soon we might be talking about a cashless financial inclusion and a bankless financial inclusion. And so I think that's where, because let's face it, only 1.8% of adults use mobile money now in Latin America. But there are virtually more mobile phones than people. So And it's very intuitive, and people understand it, and they buy air, and they sell, and they pay. So it's interesting, because I think the banking industry, the telecommunications industry, the regulators in both sides will have to come together to combine exactly this. Because I think people are a little scared to really see how far this could go, and how could this even challenge the stability and solvency of the financial sector. But I think technology will completely overrun all this, and we will see tremendous development in the next years. Now, measure financial inclusion is interesting, because there's a different, I would only say it's an obvious difference between access and use. I think what we're trying to do ourselves is more see how many times do you really make a deposit or use an account, because as you all know, there are many dormant accounts. You know, sometimes, and people only use the bank account to really get the remittances, take them out of the bank, and keep them at the mattress. You know, so I think usage is more important even, or as important as access. And the third one, anti-terror, I used to like a sentence, is don't fight terror with error, right? And really, we all know that in 9/11, all the transactions were done with credit cards by people who had resident permits and then when they tried to go against certain money transfer companies, particularly, you can't possibly demonize billions of dollars by trying to, and I think there's this panic because of know your customer law legislation, etc. I understand that there is a problem that many banks are closing accounts for money transfer companies, and in a way, these monies will eventually go under the radar again, and people will become once again walking banks, no? And I think we should try to avoid that.
Thank you, Fernando. I have a lot of agreement in the audience on what you say, and so I wanted to hear from you, Sibel, if you wanted to react on some of those questions.
Maybe on how we can measure financial inclusion. I am a quantitative person, so I like questions like that. I think financial inclusion is more complex. It's not just having a bank account, but it's a good thing to look what percentage of remittance receivers have a bank account to have a first measure of financial inclusion. Now, somebody in Africa may not have a bank account, but maybe using mobile banking. That's also a good measure, because at least they are using something. And maybe a combination of a couple of very strong indicators that are very easy measurable would be a good way of measuring financial inclusion in a country.
Yeah. And what's interesting is that the way the measure of access is also evolving. If you look at how fintechs also is evolving to incorporate some of these new e-wallets, and the usage is an important issue. It seems that the kind of question being asked in the financial inclusion community and the remittance are the same one. You know, the value comes from usage, how you transform a one-time transfer into a broader range of use, which can help to build assets, so access insurance, or pay utilities, or access credit, when necessary. But thank you very much, Pedro.
Let me give it a shot. On number one, the reason we're trying to push for the Global Forum on Remittance and Development is to bring the public, the private, and the civil society sector together. Why? Because if you divide each of them, they can spend also a lot of days government about discussing and enabling an environment without any private sector sitting in the room. You can have the same thing with the civil society, how bad the governments are not helping us, how brilliant our ideas are, but these thoughts are not heard. So where are we going to be in remittances and financial inclusion, which I think is one of the two main opportunities for development for the years to come, is if we continue on these parallel roads where in 5 years we'll be where we were in 10, I think. So not very far, and maybe going backwards. If everybody, I think, understands the potential and the roles to address this, I think we can go very far. There's roles that the private sector should take, and only the private sector. There's roles that governments should. There's mechanism, I think, we've been talking about social impact bonds or payment for success mechanism, where as soon as a specific development impact is achieved, that can be rewarded by the government for potential investors in this. I think the IDB, the Multilateral Investment Fund, is studying this. Well, this is something that can be applied also for remittances. This is just to illustrate that there's roles that should be taken and others that should not be taken by certain sectors. So I hope that in the next years, and that this forum and others to come will highlight on this. How can we, and in order to do that, you need to have impact, of course, and in order to have impact, you need to be able to measure it. Because if you cannot measure the impact before or after, well, you cannot talk about an impact. So data is absolutely crucial. If you want to reward those that do well, you need to know what your basis was. So it's a very simple concept, but there's still a lack of data. We know a lot about cost. There's a question right now about the cost comparison websites that could be linked with savings investment projects. I think this is a fantastic idea. It's complicated to do it, to make it easily accessible to others. But I think this type of baseline creation on linking remittances and financial inclusion is something that still doesn't exist. To mention with partners at IFAD, but all the other ones that we mentioned, we're thinking, and even UNCDF, about a potential index of opportunity that we could link. If I say index of opportunity on remittances, and I stop, and I'm sure that people in the room are starting to think, what does that mean? But I think I know what index means: opportunity, remittances, financial inclusion. You start getting the idea. Well, this is how you can combine, I think, opportunities are our mandate of linking remittances with financial inclusion in one. And number three, yes, Fernando Jimenez-Ontiveros' presence stole my sentence, fighting error with terror, because that's what we've been seeing for 10 years now. How can we reconcile with making banking easier? The truth is a long way has been, well, we come a long way in that. I think the G20, the work of the World Bank in this has been exemplar. They've been, allow me to talk like this, but they've been taking a lot of heat in pushing the agenda forward, in bringing from the same sector two sides that were never touching each other, to understand that while trying to fight terrorism and money laundering, we were also fighting hundreds of millions of families on the other side, trying to survive. That knowledge is now gathering to one, so I think, again, it is happening. Number three, it is happening. We're still finding issues like de-risking, as you mentioned, but we're getting there, and I think with more awareness, this problem could be. That was my answers, I'll say.
Thank you. I mean, I think you touch upon, you know, the fact that the solution or the further progress to tap these 200 billion market opportunities and also have a dramatic impact linking remittances to financial inclusion. I mean, will only happen if you have these coordinated, you know, initiatives and momentum from, you know, the public sector, policy makers, intervention from, you know, the private sector and from the civil society. And I think there is a lot of complementary piece of the puzzle which needs to happen at the same time. And I think it is and I think you're right to measure all what has been done in terms of, you know, pushing transparency, getting the issues of proportional regulation on the table, trying to make progress in measuring changes. And I think, you know, that's the same challenge about, you know, the value of financial inclusion. It's not only access, but it's usage. How you define usage? How do you define usage when you deal with e-wallets, functionalities? So I think there are a lot of common challenges. We will need some breakthroughs. I think the technology evolution will surprise all of us. And, you know, we will need to also catch up with that and see how we can leverage that to really, you know, make that dramatic move. 5 years from now, being able to say, well, it has been a major change. I would like to, you know, open now directly to the floor. I don't know how much time we still have, you as a guardian of the time. I think we still have the time to basically open it directly to the audience before I will ask each of our panelists to come with concluding remarks about what are the big ideas and the big focus that we should really, each of you think that we should focus on this agenda linking remittances and financial inclusion. So I would like to invite people from the floor who haven't expressed their question on the screen to really come up and join the discussion. We have one question here. If you can introduce yourself as well.
Thank you so much. I'm Henri from Poste Italiane. I thank you all of the interested people about the information that I received. But I have two different points in my idea that I have taken in very good consideration. Paola Giucca informed us about the very good activities that we realize with some stakeholders in Italy. And Italy, as you know, joined the results of the 5% objectives and the Poste Italiane from 3 years ago. These results will join, thank you, a very good partnership, relationship, and activities that we have realized between us, which is the suggestion from my side, that a very good relationship, partnership, and work between the stakeholders interested in each country are very, very important. The bank, money transfer operator, the central bank, and the operator, Poste Italiane, and so work together to join the results. So this is the first in my opinion. The second is a very, very important marketing approach. In our experience, for example, the different offer, the combined, the integrate offer between the different products, not only for transfer fund, but some other product that a company can offer is important because the reduction of the cost and first of the cover of the cost that you have in any case to consider, if you give to the customer a specific product that they like, when the customer go in the postal offices, not ask only to transfer fund, but send an envelope or some other, it's possible to combine the different products and offer to reduce the cost and elevate some other, combine the different integral offer, and to offer specific products very, very low cost. For example, card or some other transfer fund are very, very small, low cost. Mm-hmm. 3 different points: partnership, marketing, and diversification, different products. We see the future, work together to join the results that I like. For us is important. Thank you.
Thank you very much. Michael.
You want to take one more?
Please.
Yes,
yeah,
Michael Hump, lead technical specialist, rural finance, IFAD, so part of the rural finance team of Pedro. I would like to thank the panel for the optimistic view when it comes to global standards and national regulation and enforcement. I have a less optimistic view. I don't see the reconciliation of making banking in rural areas easier. I see for a period of the last 4 years, actually, exactly the opposite. I see the enforcement of compliance mechanisms a tremendous obstacle and barrier for the inclusion part of remittances. And I think it is a Herculean task for us, for all of us, to work on that. And I think in particular the multilaterals have a core responsibility, but let's wait for the World Bank to come up with the survey results for the GFRD. And I think we will have to do a lot of homeworks on that side.
Thank you. You know, I think it's it's a realistic point, and I think we see that in our program. I mean, one of the activities that we did under the Pacific Financial Inclusion Program at CDF was to worked with four central banks of 4 of those countries to write a joint letter to the governments, the regulators in Australia and New Zealand, and the G20, arguing the point that the application of the de-risking and the closing of MTO accounts were basically having a very strong adverse consequences on remittance flows and financial inclusion. So it is a real issue, and I think it's up on us to really try to continue to push that dialogue around proportional regulations. So it goes beyond, I think, the international bodies. It's also linked to how these kind of issues come up in the judiciary system of different countries. So it is a big challenge, but it's a real one that we need to tackle. I agree. I think, thank you very much again for your contribution and also mention of the post-bank role. I know that we didn't talk specifically about that, but post-bank in some countries have an important role to play. I mean, they have the infrastructure, the rural outreach, and there have been a lot of cooperation and program involving the post-bank around remittances, including through the financing facility for remittances. So thank you for also mentioning that aspect. I think, I would like now to come to the concluding remarks for our panel. And, I know it's a huge topic, so I think we talk about a lot of interesting dimension to it, a little bit in disorder, even though we try to organize the flow. But I think what I would like to do is to go around, our panelists to really share final takeaways, big ideas, priorities that you think we should all focus on as from a development community perspective to really kind of push that agenda of synergies between remittances and financial inclusion. So why don't I start on my left?
I have a final message also for the audience on the next
All right.
I'll verify finish.
So,
well, for me, just very basic takeaways, very obvious, or perhaps that, of course, remittances can be a tremendous tool, not so much to help productive investment, that's more migrants' capital, but it's a tremendous tool for financial inclusion. Second, in Latin America, in the last 10 years, 60 million people escaped poverty, but they are not integrated in the financial sector. So chances are that because they don't benefit from financial inclusion, they won't have the elements, the tools to start accumulating assets and to help them fight the contingencies and the changes that they might face. So it's important, either the banking system and the financial sector understands that, or we might have, particularly now with the downturn of economic activity, these people falling back from the $4 to $10 to the $0 to $2, and not every day, by the way. No? So, and then things that have to be powerfully expressed are that, it's very expensive to be poor. The poor pays better, repays better. That's our experience. Microfinance have less mora, como se dice, no? Arrears than SME finance. Second, the poor saves a lot precisely because he has to, saving is the abstention of present consumption for future consumption. So they have to manage their liquidity very well. So those two things are very important. And third, let's not kill mobile banking, no? Because sometimes if we believe technology by itself alone is not going to bring about, I think, particularly in this phase, financial inclusion. It has to do a lot with financial literacy. It has to do with combining really dedicated institutions that through networks and through technology are able to take this to scale. Because I think actually the models exist. There are 37 models of mobile banking in Latin America, but the big challenge is taking them to scale. And I think that's the challenge of the future.
Thank you, Fernando.
Yeah. Thank you.
Paola.
I will take with me one reasoning. Somebody said before, optimistic approach. I don't think we see the problem. I'm not personally optimistic, but as a central bank, I have an aptitude to see where there are some gaps, there are some opportunities. So in this sense, and I take on board the issues that I understand during the panel. There is a market. Private sectors can do a lot because they are the front end with the remittances and the financial inclusion process. In our experience in Italy, we, as also Mrs. Restano said before, we enjoyed a very good opportunity to work together, and we will continue to do so, because private and public may maximize the results together. And we continue to put a lot of effort in financial education to all the levels. As a central bank, I forgot to say it before, we are very active also with financial inclusion, especially now in some part of financial inclusion related to remittance to school, because nowadays there are a good opportunity to start very early to make such kind of education. But at the end, I think really that the private sector has the big role there, and see also the very big business cases going on, and the new opportunities with other innovative channels is there.
Thank you, Paola. Sibel.
I think my main takeaway is that there seems to be a lot of differences based on region. I don't think some people are more optimistic or less optimistic, but for example, when I look at my region, for example, especially at Eastern Europe, things changed quite a bit, and there is reason to be optimistic. And when you look at what has happened in remittances, you can tell progress. But I listen to some of you and some other regions, and I can see that some countries are stuck where they are. And maybe this is something we need to think about, why they are stuck where they are. And I really hope that we manage to measure financial inclusion of remittance receivers in a good way, that we can tell next time we meet which countries have made true progress and which haven't. Because I think a lot of the frustration is coming from different regions and different problems.
Absolutely. Pedro.
I can only support what you just said. It's a good argument for the cocktail that is going to follow. So with a glass of wine, we can really continue. But it's true that there's differences between the regions. Some regions, the risking that we were discussing, affected mainly the Horn of Africa. Other regions, and not as much. There is being progress being made. Of course, rural areas do suffer. In IFAD, we work in rural areas where every problem in many ways is amplified. But my take-home message is there is no silver bullet for this, but there's a golden opportunity. So it is a fact we've been saying now is to do this dichotomy of this silver to try to identify the mechanisms to.
I think it's you really coined the last message. No silver bullet, but golden opportunity. And I think, to be pursued by linking a lot of pieces together, because it is complicated, but at the same time, it's probably feasible, and it's an imperative for us to look at. And linking remittances to the broader financial inclusion agenda, we should take that home as an imperative for all of us to really think of how we can help that to happen, bearing in mind, the issues and obstacles which exist, but also the opportunities. So, please.
This discussion will continue tomorrow within the private sector day. So we will have, from a private sector approach, how do they see the same questions and opportunities that we've discussed. So we're really looking forward to that discussion tomorrow by the end of the day.
So on that, let me thank you again, our panelists. You wanted to say something, Helen? And thank you to all of you.